Hello folks, welcome to Real Estate Q&A. I'm your host Greg Delane, and on this show we go over real estate issues and things that impact our industry. Today on the show, I always say experience is the difference. So I try to get experienced, top people that have time in this business, and I have two gentlemen on the show today. They're with Prime Lending. I have Lee Gallman and I have Sean Thompson. How you guys doing?
Very well.
Pretty good.
All right, listen, on this show, we only have a half an hour show. What I want you to first do is introduce yourself to my viewers and share a little bit about how you ended up here on this show, what your knowledge is of the business and what got you here.
Okay. I guess I'll start. Once again, my name is Lee Gallman with Prime Lending. I'm a senior loan officer. I've got about 20 years experience in the financial markets, and what brought me here, you did.
Okay.
You have always presented a great platform and always been knowledgeable in real estate, and when the opportunity came to be part of your show, I jumped at it.
All right. You've been in the business, Lee, 20 years.
20 years.
All right.
Oil of Olay does well for the skin.
I like that. Sean.
Well, I've been in the business about 17 years.
Yes.
And I'm one of these renovation lending guys. You may have heard the term before, but I specialize in, and I'm the regional renovation sales manager here at Prime Lending. I specialize in a style of financing that allows customers and sellers and homeowners to get the money to finance the house, plus the money to renovate the house. Okay. So in this HGTV culture that we live in, it's becoming a very household name and appropriate way to finance not only the purchase of it, but the repairs.
All right, let's talk about that. Renovation lending. Now, let me just throw this out. I mean, after Hurricane Sandy, this sounds like something that would have been fantastic for people to do to get their house, certainly if you're getting ready to sell your house. Has this given you a lot of business? But let me not say what I think. Explain to me. Renovation lending, what exactly is it?
So even before Hurricane Sandy, and Hurricane Sandy is an issue. I think there are some things that will come up as a result of Hurricane Sandy later on that will require renovation financing. But even prior to that, you look at the inventory out there. You look at what buyers want from the houses that they buy, and you look at all the shows we're watching about renovation, and they don't really talk about the financing of, but that's where it's really important nowadays. I think the household push is to get people to understand that they don't have to settle for the mint lime green kitchen in the house. They can get the money to buy it, plus the money to renovate it, all wrapped up in one loan, and put down a very small down payment on the two numbers combined. Okay. Right? So you think about that as a very powerful style of financing in today's market and today's inventory being a little beat up, as some realtors may know about.
So, Sean, what you're saying, a buyer does not have to go write two separate loans, one to buy the house and one to do the renovations. All this is incorporated in one loan?
Right. So clearly, I look at it this way.
Okay.
Buyers put down, let's say, 3.5% on an FHA loan, right? So if you're putting down 3.5%, sometimes buyers exhaust everything they have with just the 3.5% and the closing costs. And then statistics will tell us that within the first 3 years of their home ownership, they're going to do some type of renovation, new appliances, new carpet, window treatments,
furnace.
The four things I named could cost you 20 grand. So not only do you have to come up with the 3.5%, your closing costs, but where are you getting this 20 grand? Yeah. What I suggest is that renovation lending allows you to get the money to buy the house. We tack on the 20 grand. You put down a 3.5% of the two numbers combined. After closing, we give you the money, you and your contractor, as the work is completed, and you move on. It's built into the payment.
Now, let me ask you this question, and because I know how the 203K kind of works. That money has to go to that extra 20 grand. Does it go to a licensed contractor that's giving bids, and it's in portions, or is it all at once? How's that done?
Good question. So, I like to say it at time of closing, we pay off the seller.
Yes.
I hold in an interest-bearing escrow account on their behalf. The money we identified up front as renovation, we got a contractor bid or an estimate,
yes,
right? And to be given to the contractor of their choice. They choose who the contractor is.
Okay.
All right. They can choose just one. They don't have to look at 12 of them, or we're not going to make them, and we're not twisting their arm over who they can use.
All
They
right.
do need to be a licensed professional.
Yes.
State requirements.
Yes.
So whatever your state requires a contractor have in order to do
Licensed,
business,
insured,
right?
Yes.
We require that too.
Mm-hmm.
We close.
Yes.
And then after closing, as the work is completed, you do a little work, get paid, do a little work, get paid,
Okay.
until you're done. We'll pay the customer and the contractor, typically by a two-party check.
Okay.
So it's a check made out to the contractor and the customer.
Well, that kind of protects the customer,
Mhm.
because I've had some situations with contractors, and it leaves them a little bit more in power to make sure the work is done and done correctly.
Well, contractors don't get paid up front in our world, and ask us how we learned that lesson.
Well, that's another whole show, because I can't tell you how many people call me and say, Mr. Delane, can you refer a contractor? And I'll say, wait a minute, Mrs. Brown, you've lived here 40 years of your life. Why are you calling me? Because I know that when you refer people, ultimately, I don't care if it goes great, if it goes bad, it drops back to you. And, I really have to watch out. I had a contractor, I referred to this lady once, and the contractor called me and said, Greg, what did I ever do to you? If you don't want, me to do any work for you anymore, you don't have to do it this way. I said, what are you talking about? He said, this lady is not satisfied with anything. Now, this guy's worked on my house. I know he does excellent work. But the seller kept adding on stuff, didn't want to pay, and he thought I did this to him on purpose. So I really have to be careful where I refer my guys. And I usually just say, all my guys are busy. I don't have anybody for you,
Well, Greg,
no, go ahead.
You brought up an interesting point, and I just wanted to touch on it briefly with Hurricane Sandy.
Yes.
People learned some very powerful yet painful lessons in the insurance game, in that most people didn't know about storm deductibles. They didn't realize that although my claim may go in for $20,000 and the insurance company may say, yes, great, you actually didn't net $20,000. People found out that the adjusters that came out there weren't always from this area. And as you know, with the age of the housing stock here, we don't have Home Depot style homes. These are not brand new homes. Some of them are 100-year-old homes, 70-year-old homes. You just can't go to Home Depot always and get any product and slap it on and make it work. Some of the work has to be custom done just because of the age of the home. Some of these homes were in historic areas. Some of them were at the shore. So, we had some folks come here that the insurer sent out to judge what the value was going to be, and a lot of people found out the money that they received didn't cover everything. So what our renovation platform allows a homeowner or a buyer to do is to say, I can fill in those gaps. The insurance company gave me this, but I need this much more work to do. And as Sean was talking about, you need to be able to figure out, how am I going to get to that point? And that's what renovation lending will do. Whether it's $35,000 extra for streamline, or whether the roof really needs to completely come off, or as some people who live in shore communities found out that had damage, these things are now going to have to be built on pillars. So there's just so many different things that we can do with the renovation platform that the traditional loan can't do, that the refinance and pulling the money out won't do, because they're going to take a look at it and say, what do we have? And most appraisers are going to come out and say, I don't know what to do with this. So that's why being able to have the flexibility of bringing in contractors, bringing in architects and all different types of professionals to craft this and bring us back and make us whole again post-storm, that's the power of renovation lending. And
you bring up a really good point. I mean, and you brought up the age of the housing stock, right?
Yes.
So you look at, they're perfectly good 3-bedroom one-bathroom houses out there.
Yes.
But it's a functional inadequacy. I got 2 daughters. That's not working for me in my house, right?
One bathroom?
1 bathroom with 3 bedrooms, you know what I mean? So, and that's the point. A lot of people look at renovation lending, agents, real estate agents as well, and say, well, it's only for homes that are in need of repair, only for homes that are in severe disrepair. Where I would challenge that and say these are for all the homes you see that are just functionally inadequate anymore. Think of the things we've come to expect from the places we reside in. Central air. Is that really an option anymore? Central air, a 3-bedroom, 1-bathroom house. Nobody wants that anymore. And this is a way to go into that situation, which may be a cheaper home because of that functional inadequacy, right? And then you can come in and use a renovation loan to renovate it, to make it a 3-bedroom, 2-bathroom house, or add the central air as part of your loan. All right, which makes it really flexible and open to a lot of people in this market, especially first-time home buyers who are stretching their dollar to begin with.
Let's move it over to I own the home and I want to sell my home.
Yep.
And it only has 1 bath, but it's a Cape style house. I can drop a bathroom right below it, or I can run a bathroom right up above it because I can vent it out. The pipes are right there. Does this help with me doing a little something before I put my house on the market?
Absolutely.
I want to upgrade my electric, all the things that, because I try to tell sellers, you might need to get that home inspection from a real good guy to walk through your house. What is it to spend $300 or $400 to really find out what the home inspector for the buyer is going to find it now. Let's straighten all this stuff out, So can they do that to prepare their home to sell?
I would say it helps the seller in 2 ways, right? One of the 2. One being you need the bank to consider, the mortgage company or bank to consider what the after improved value is in order to get the financing in the first place. So the house is, let's say, worth $200, you owe $190, but you want to do a new kitchen at $35,000.
Yes.
Right? That's going to push you over the value. But if you do the new kitchen, the place is worth $250.
Yes.
Right? So that's where you can use renovation lending. Otherwise, it's a simple cash out refinance, right?
Yes. Yes.
That's where renovation lending is great for the seller. The other way it's great for the seller is marketing the property using renovation financing. Have people come in before you put it on the market. Show what it could be. Show before and afters, right? So that when your buyers come in, they get this, and I say it a lot, HGTV-like vision of what your house could be. It's worth more. It's worth more now because they know that they can get the style of financing to renovate it, and it might sell quicker for you without you having to do the work as the seller.
Excellent. That's a great point. All right. I love it. I love this renovation lending. Let's talk about right now how the market is. No, first, before I say that, prime lending. You guys are licensed. I know you from New Jersey.
Yes.
But can you write a loan here on Mamaroneck Avenue in New York?
Yes, I can. We are licensed in all 50 states. There isn't a loan I can't do in any part of the country.
Okay. That's what I need to hear. Because most of my clients are seniors. They paid off their home. They've owned it for 30 years. Now they're empty nesters. They're going to not only sell their home, and I'd like you guys to work with the buyer coming in, but they need to purchase when they go down south, when they go to Florida. So you could help out a homeowner who might need to do a little work on their house, or the buyer who's going to buy the house, plus you can write the loan for them when they go down to Florida?
Absolutely.
Okay. I've always said, listen, you need to have one broker to handle both and I've done quite a few of these where I'm representing the seller, but I'm representing the seller when they're the buyer, because the least amount of people you have in the room makes it better. I like to have one attorney handling both, or at least refer the other attorney, so you can't have 2 brokers, 2 attorneys, two, and you're just moving from 1 block to 2 blocks away. You need to have, as least as possible with it. So you can write loans in 50 states.
We can write them in 50 states. Just to give you a little backdrop on prime lending, we are, as Sean has said, the number 4 purchase unit bank in the country. You have your Wells Fargo, you have your Bank of America's and your Chases of the world, and then you have us sitting at number 4. So what does that tell you? That we are a premier player in the industry. We are headquartered out of Dallas, so people in Texas do things big, as you know. And the vision that started back in 1987 has grown to a nationwide company. We are large enough to compete with the Wells of the world, and we all know how big Wells Fargo is. But where we have a competitive advantage is that we're not so large that we're clumsy. We have forward thinking, we have great products, we have what we consider in our world common sense underwriting.
Yes.
They don't strictly just look at a guide and a manual and say one size fits all, because sometimes there are pieces that stick outside. And that's the benefit of being with a banker such as myself. I'm not beholden to any one place. If I worked for a Wells Fargo or a Bank of America, all I can do is Wells Fargo and Bank of America. And I'm sure they have a few side products that they can broker out for things that don't fit. In my world, and when I sit on the side of the table, and I always sit on the same side of the table as the client, I don't ever put a desk in between us, just so you can see that we're in this together. I've got about 20 different options I can show you. And it doesn't matter to me which one you choose. If you have an affinity for Hudson City Savings, we'll do Hudson City Savings. If you want to do Fifth Third Bank, we'll do Fifth Third Bank. It doesn't matter to me. My job is to sit there and show you, here's your options. Here's what makes sense. These are the things that don't make sense. But if this is what you want, this is what we will do.
Well, listen, that's common sense stuff. And my clients, I need clients for life. And I want to be able to answer their questions and help them. And if helping them is moving them somewhere else because there's something else going on that I just can't do for them, then that's what I'm going to do. We were talking right before this came on, and I have some guys that I know at Wells Fargo, but something just happened and they weren't able to put this deal together, and I'd love for Wells to come over here and we'll talk about it. But the fact that when you go into one store and if they don't have what you want and they tell you they do, and to sit down and we'll get it for you, and then you find out right before the store closes, no, we don't have it, then you have to get up and walk out of that store to another store. Go to somebody that can deal with a wealth of things, because I don't care where you go to borrow your money. That's on you and that's your right. But guess what? If Chase is not loaning on that, then you're going to have to physically walk out of Chase and walk into another bank. If that bank is not loaning, you got to physically walk out and deal with somebody that's might dealing with 30 or 40 different companies that might be able to lean towards what you're trying to do, because there's no perfect loan.
And we're clearly doing a lot of things right. I mean, the company did close to 65,000 purchase units last year alone. All right, so we're heading in the right direction. That's a lot of units, right? It's a technologically savvy company. You want to be the guy that sits right next to me, I'm in. You're too busy for that, and you want to go plug in www.whatever and fill out the app, I got that for you as well. All right, so it's a very technologically savvy company. We're growing. We're number 3 in renovation lending in the country right now. All right, so that's actually a very big spot for us that we're looking to increase as well. So you said it right. You know, the company's got a lot of things for customers to actually look into. It's really, mortgages without obstacles is not just on the card. It's really kind of the way we look at it.
And we also have the other products that you need in the New York metro area. Excuse me, if you're going to be in mortgage business, you better be able to close a co-op.
I was going to ask that question.
We do co-ops.
You do co-ops, okay.
We do condos.
All right.
The only thing we won't do are mobile homes.
Me either. Now, I wanted to get back. This renovation lending, residential, and how many units does it go up to? Because we didn't say if this is for residential properties, up to how many?
1 to 4 units.
1 to 4 units. So if I had a 4-family,
yep,
you could handle it.
Absolutely.
Okay.
Absolutely. If you had a 4-family that was being sold for pennies because it was gutted, I can help you acquire it, get the money to renovate it. All right, and that's a very special thing in this environment where there are lots of REOs and short sales, where the condition of the property is an issue.
All right. Okay.
Yep.
Excellent. They need to know that. You guys out there in the world that have that question, you need to know that. And any questions that we don't answer right now, their card will be, and their names and numbers will be put on there, and you got to give them a call. The only stupid question that there is the one you don't ask. So call and ask, because I don't know. Now, I got a question for you. Lee, how does a buyer know if it is time to continue to rent or time to buy? Say I'm paying $2,300 a month.
That's a great question, and it's a personal question. As you know, there are a lot of people who have cars, and some of them don't need to be driving. So it's home ownership is no different in that it's a personal feel of, am I ready for ownership? Do I want to have the pride of ownership, the sense of community? Am I at a point in my life where I want to set roots in this community? Because it is a long-term investment into what I consider the greater community when you decide to buy a home. From a financial point of view, and I always encourage people, sit down with your other professionals. If you have financial advisors or tax people, sit down and talk about what the benefits, pros and cons are. But if you are paying $2,300 a month in rent and you have a one-bedroom apartment, I could sit here and say to you, we can buy a $400,000 house and maybe get 2 or 3 bedrooms and some grass and some things like that, and the monthly payment would be about $1,500. So you kind of have to look at the numbers, and then it's emotional decision of, am I ready to cut the grass, fix a window, and do simple maintenance things around the house, or do I only want to put the key in the door and turn it and never have to be bothered with any issues? What the market is telling us right now is that it is more expensive to rent than it is to own. And reason being, rentals continued to go up as people walked away from the housing market, whether it was because of they're just coming out of college and they didn't have the money to buy, or they transitioned out of a home and they went to the rental market, or they're new to the community. What we're seeing is that rents continued to go up and the rental market stayed strong even during the housing bubble. But right now, because of the value of homes has come down so much, we have what we consider a perfect storm in that interest rates are at historic lows. So you're getting an interest rate at the bottom. Housing prices have come down from 2006 to where they are here. So this is the perfect time to buy, and it's screaming buy signal. Cheap rates, cheap house price. That's the best time to buy.
You're good.
I try.
You're good. I got a lot of guys that work for the garbage department, and I know these guys, DPW, and so guys making $70,000 a year, maybe a little more. What would his credit score have to be if he wanted to come out and try to buy a condo for $200,000 or a house for $250,000, and he's making $80,000 a year? What credit score is? You got to work on some stuff, get it cleaned up, get up to a certain number. What does he have to be? In the 6s, 7s?
The market right now wants 620 or better. 620 is your basic cutoff point for what we call government loans, or things like FHA.
Yes.
Or state bond agency programs.
Okay.
Are there different loans out there that will go lower? Yes, there are, but there's a cost for that.
Yes.
And typically when you go above and beyond or below what the market wants, the downside to that is the interest rate is probably going to be higher, because somebody is assuming a greater risk than what the market really wants to do. And at the end of the day, what all banks want to be able to do is take that loan and sell it. So when they look at your loan, Mr. Buyer, they're looking at you to place you in a pool of loans, as we've all learned about over the last couple of years, and how loans are securitized. What they want to be able to do is say, I have created a situation that this person is fine across the board based on whatever guidelines that the world wants. So the things that we look at on our end are what we classically call the 3 C's. They want to know about the credit. They want to know about the collateral or the capacity. And then the third C is probably the biggest one right now in this market, which is character. Lenders are now looking at you with human eyes, where before all we did was hit a button and a computer would tell you if you were approved or not approved, and that was it. They're now looking at your character. Do you pay your bills on time? What's your track record? What's your history? Do you have job stability? Or are you in something that 3 or 4 months, every 3-4 months you're changing jobs? They're bringing the human element back into the decision-making process, which I find to be good because, once again, it creates an aura of common sense.
Okay. And having said that, I don't want, and that's a great job at explaining it, Lee. I mean, I don't want your customers or your audience to really feel, like if you have a 616 credit score, that's something you can't move, yes, or look at. There are ways, especially in this environment now more than ever, seeing as the FICO score is so important, to take a snapshot of where you are today, look at your entire credit history, and see if you allot funds here, pay that down there, move this over here, add a little bit more there, can immediately affect and impact your credit score to the higher. And we have ways of being, yes, able to run those scenarios, do what-if calculators on it, and say, hey, you know what? If you took $300, paid down that credit card, your 616 will go to a 634. And then you do that, we run it, and those scenarios come back, in fact, to be true. We have those means at Prime Lending to do that for you, so that your low credit score today may not be the end-all to be-all to buying a house in the near future.
And one thing that people don't know, and it's a little common trick that we've learned with credit, is you can have stellar credit, and if that creditor doesn't report your limit,
yes,
it can lower your score. Prime example, store cards. You go to Macy's, you go to Nordstrom's, if they don't report what your credit limit is, it's only going to show the high water mark. So if you charged $400 and paid off $400, $400 is what the computer sees as your limit. Your limit may be $10,000. So if you have that $400 limit showing, and then you go charge another $375, well, the computer is reading it, or the credit agencies are reading it as you're almost at capacity. And anytime your credit accounts are sitting at the higher end of their limit, it brings your scores down. So one thing that we've done with clients in the past was do something as simple as call your credit card company and have them report a limit. And we've seen credit scores jump,
listen, guys,
significantly.
Great information. Our show is just, see how quick this happened? Our show's up. Prime Lending. I got Sean Thompson and Lee Gallman here. You guys give them a call, speak to them about it. Thank you guys for coming.
Thank you.
All righty. Bye-bye.
Thank you.